when they dumped all this money when Trump and Biden dumped all this dough into the system to artificially prop up the economy when the COVID war, when they locked down everything, your interest rates are at zero. So now the banks own all these worthless treasuries. So they don't have the money to cover the defaults on the loans. There's going to be a crisis, and we're saying, again, one of our top trends for 2024 was a golden year for gold. As we're speaking, gold is what? $2,360 an ounce. It's up over $300 an ounce since we made that forecast. Gold could very well hit $3,000 an ounce this year.
In an era of economic uncertainty, trend forecaster Gerald Celente's predictions are drawing increased attention. Celente, founder of the Trends Research Institute, has long criticized current economic policies and their potential consequences. Recent statements by Federal Reserve Chair Jerome Powell have fueled speculation about the future direction of interest rates. Powell suggested that more good data on cooling inflation and labor markets could pave the way for rate cuts. This comes after the Fed's June meeting, where it maintained current rates and reduced its forecast for 2024 cuts from 3 to 1. Celente, however, paints a more dramatic picture. He argues that the dollar's current strength is artificially propped up by high interest rates, which he deems unsustainable given the nation's massive debt. Celente predicts a necessary lowering of rates, which he believes will weaken the dollar and drive gold prices higher. The forecaster's concerns extend beyond interest rates to the banking sector's stability. Recalling the turmoil caused by 3 bank failures in the previous year, Celente warns of potentially more severe problems on the horizon. He cites Federal Reserve estimates suggesting at least 22 banks could face difficulties, mainly due to commercial real estate market issues. Historical precedent lends some credence to Celente's gold price predictions. Gold prices significantly increased during the 2008 financial crisis, marked by bank failures and economic instability. Gold futures rose from $837.55 per ounce at the start of 2008 to over $1,000 by mid-March, a 23.4% jump. However, it's worth noting that this surge was not sustained throughout the year, with prices settling at $879.50 by year's end, resulting in a more modest 5% annual gain. Please tune in for our exploration of Gerald Celente's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Going back to the dollar and where it's going, they're going to be lowering interest rates. I mean, the only reason the dollar is strong is because of the high interest rates. I mean, how could it be strong when you have, $35 trillion of debt? You got, we're growing $1 trillion every 100 days? Oh, and you have these high interest rates, so you're paying more on your debt? So they're going to lower interest rates. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go up. And this is important because other countries are lowering their interest rates. And it's one big club. As George Carlin, who was great, said, it's one big club and you ain't in it. The United States is going to lower their interest rates because they don't want to bring down these other countries with the value of their currencies declining so rapidly because the dollar is strong. So the United States is going to get into the game and lower interest rates because if they don't,
even if they just told you we're not in a rush to,
yeah, they're going to do it. They again, because you're looking at look what's going on in the underdeveloped nations. The emerging markets are submerging. They're going down really hard. And again, you look at what's going on in Japan with what's going on with the yen, with their low interest rates, and one after another. Oh, they're going to raise them to what? They've just raised them out of negative to almost nothing. So again, they're going to be lowering them. The lower the dollar goes, the higher gold prices. This is just the beginning of the gold rush. But again, you got to watch what happens because, as I mentioned before, you look at the big companies that own so much of the markets, that are in control of so much. So they're going to try to do everything they can to keep gold prices down. You look at the data coming out from everywhere. You look at the PMI numbers, manufacturing numbers, they're soft all over. You look at the retail numbers, they're down. You look at the job numbers, they're coming in softer than expected. You're looking at the GDP numbers coming in softer than expected. The whole thing's going down. And it's only going to be a matter of time when the reality hits Wall Street. And it's going to hit. And again, we're saying that what's going to bring it down is the office building bust. It's gone. It's gone. These people are not going. They're not going to go back. And and the other thing too, very important. Off the buildings built in the last 50 years, according to the data, are non-convertible to housing. These are just big empty spaces. And now they're saying they're going to turn them into warehouses. They're already overbuilt in the warehouse sector. So no, they're not. And that's going to bring down the banking system. Again, when you go back a little over a year ago, we had 3 banks that went under: Signature, Silicon Valley, First Republic. It brought down the equity markets and gold prices spiked. That was 3 banks. 3. And now you have a minimum, according to the feds, of 22.
Gold continues its upward trajectory, marking its 3rd consecutive day of gains on Thursday as prices climb above $2,380 per ounce during early European trading. This recent surge, while impressive, still falls short of the week's peak, highlighting the precious metal's ongoing volatility. Renowned trend forecaster Gerald Celente's earlier predictions of a golden year for the yellow metal appear to be materializing. Celente, who had forecasted gold's current price level of around $2,360 per ounce, now suggests the possibility of prices reaching $3,000 per ounce by year-end. Once considered bold, this projection is gaining credibility as market conditions evolve. Interestingly, this bullish sentiment persists despite the People's Bank of China reporting no additions to its gold reserves for the 2nd consecutive month. While noteworthy, this development seems to have had minimal impact on the overall market sentiment towards gold. Adding weight to the optimistic outlook, Citi's commodity analysts have released a report predicting that robust gold demand in the latter half of the year could drive prices as high as $2,600 an ounce. The bank suggests that investors may be playing catch-up with the broader marketplace, potentially fueling further price increases. Looking further ahead, Citi envisions gold prices trading from $2,800 to $3,000 per ounce by mid-2025. Let's get back to the interview.
They're going to do everything they can not to have a crisis before the election. That's guaranteed. But whether or not they can do it is a guessing game. Even when you're looking at the official numbers coming from the feds, you're looking at about 22 banks that are facing problems. Other data is showing up to almost 300. Again, barely being reported, and you're having one default after another, hardly being reported. And now let's go back when they dumped all this money when Trump and Biden dumped all this dough into the system to artificially prop up the economy when the COVID war, when they locked down everything. Your interest rates are at 0. So now the banks own all these worthless treasuries. So they don't have the money to cover the defaults on the loans. There's going to be a crisis, and we're saying, again, one of our top trends for 2024 was a golden year for gold. As we're speaking, gold is, $2,360 an ounce. It's up over $300 an ounce since we made that forecast. Gold could very well hit $3,000 an ounce this year. Before I came on with you, I wanted to see what one of the headline stories was on CNN. The son of Asia's richest man is getting married in one of India's most lavish weddings of the year. What the hell are you telling me this crap for? What's going on in Ukraine? What's going on in Russia? What's going on in Lebanon? What's going on in Iran? What's going on in Israel? The Taylor Swift, this is the crap they're putting out. What the hell do I care? Some clown getting married in India. Why, he's rich, and you should know that. People don't have a clue. So going on, World War III's already begun. We forecast World War III. You go back to our Trends Journal magazine 2 days before the Russian invasion. From COVID war to Ukraine war to World War. And now what's going on with the Israel war, ramping it up against Hezbollah in Lebanon. And what did Iran say? You attack Lebanon and you go after Hezbollah full force, we're going to wipe you out. Love it, hate it, agree, disagree with anybody you want. That's not what we do. We just put down the facts and give you the implications. There is going to be oil prices. You're already looking now at Brent crude. It's almost $86 a barrel. Oh, it just moved up, about another $5 a barrel. They go to war with Iran. You're going to see oil prices go to Bell. And they're going to keep launching more and more attacks against Russia because the United States and NATO gave them more weapons to go deeper into that. They're going to be attacking oil fields, refineries, pipelines, etc. You're going to see oil prices could go up to $130 a barrel. And that's going to crash global economies and the equity markets. And again, the banking crisis is going to crash global equity markets and the economy. Again, and these are realities. These are in front of everybody's eyes to see.
The Federal Reserve Chairman Jerome Powell's recent testimony underscores the central bank's data-driven approach to monetary policy. This stance continues to shape market expectations and influence asset prices, including gold. Given Gerald Celente's bold predictions for gold prices, the Federal Reserve's cautious stance on interest rates, and the ongoing economic uncertainties, how might investors balance the potential for gold's rise against the risks of market volatility in the coming year? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.